Hello and welcome to the cryptocurrency news channel. I tell people to always DCA in whenever it dips, and I still strongly stand by that kind of sentiment that if you are more careful, you're a sound investor, you should DCA in, not buy all in at once. However, I am not really going with that. I'm actually waiting for a big drop to hit a grand slam. And here's why. The main reason is because I'm already 70% in. Remember, I sold about 30% out a while ago, and I've been waiting for a giant dip to get in with that 30% to hope to buy a lot. So because I'm already 70% in with the money that I want to be in, I am not in a hurry to actually get that other 30% in. So even if I don't get that other 30% in and it goes up, I still win because most of my money that I want in crypto is already in cryptocurrencies. So that's one reason why I don't automatically buy in whenever it actually dips. So a lot of you may not be 70% and you might just want to be buying every time you get a little bit extra money. And in that case, DCA is probably your best option. Second of all, I actually kind of look at the stock market right now and it's kind of shaky, honestly. Yes, the futures are up tomorrow, but the stock market is actually really, really shaky. Tech isn't doing quite as well as it was. And this a new wave of COVID shutdowns could hit like a truck. And if it hits like a truck and runs the economy over, I don't know if the Fed printing ever more money will actually solve that problem. And we have the presidential election coming up. And I think regardless of who wins, the economy might eventually go down because they may not have as much incentive to print infinite amounts of money to float the economy up afterwards, because obviously the current administration obviously wants to at least float the economy up or float the stock market up until the election so you don't lose approval rating. And once that's over, the incentive might not be there. And obviously if a new administration comes in, they won't have that incentive to actually immediately improve approval rating because they have 4 years, whichever administration wins. So after the election, there actually could be a stock sell-off. And that we go into the holiday season, COVID's still around, no one's traveling. Industries are going to have problems, and the holiday travel stuff is going to suck. Airlines are going to need more bailouts and stuff, and people, I think, as this drags on, may actually lose more confidence. So if consumer confidence is really down for the holidays, it'll be a pretty bad holiday season, especially if people are out of jobs, or they're yes, some of them are reemployed, but they're probably reemployed at jobs that don't pay them as much. A lot of the manufacturing jobs of the retailer jobs may be gone, and some of them might be employed, but they might be working at McDonald's, which means they're not making as much, which means they can't spend as much during the holidays. People might have less disposable cash sitting around. And for that reason, I do actually think, I'm of the opinion that the stock market is going to be fairly weak after the election. And obviously the political environment, it's going to be very, very weak. And it's not only the United States. If you look at Europe, another wave of COVID, I don't think they'll actually have a vaccine until mid next year, honestly. And because of that, I don't think we're going to have a rebound until mid next year. And right now, we've seen that basically crypto actually follows the stock market. So I think if the stock market tumbles, crypto will tumble. I actually think the stock market should be at 15K, honestly, if the Fed wasn't printing trillions of dollars to actually float it up. But they were never going to be able to do that forever, and I don't know when they're actually going to hit their limits or how much they're willing to actually stretch. Obviously, they just announced that interest rates are going to be low for years. That helps the market a little bit, but that doesn't completely restore consumer confidence. So we'll actually have to see how the stock market plays out and how much they're willing to buffer it to actually keep it up. Maybe after the election, they won't buffer it as much anymore because they're not striving for approval ratings. But overall, I think the economy is much weaker than it actually looks, and I think all asset markets are going to be hurt because of that. So I'm not expecting any kind of gigantic bull run, so I'm not afraid of keeping the other 30% out, and I'm looking for a sharp drop, because I think we could have one like we did have early this year. Any kind of event could actually trigger it. The college kids went back to school, a lot of them party, and there's tens of thousands of new cases on college campuses. So the reopening of schools has not worked all that well right now. So because of that, I do believe that it is fairly likely that we have a big downturn, a sudden downturn sometime that will actually quickly correct itself. But I want to buy in that downturn. And since I'm already 70% in, I'm not afraid to wait for that downturn because I'm not afraid about missing the boat because you know what? If the boat comes, I'm on the boat already with the 70% anyways. If you're not like that, I would still suggest you DCA in because DCA in is like more solid. You're getting a little bit more in each time. But for me, I'm waiting for that home run. And that is why I'm waiting for the home run. I don't suggest everyone do it. But for me, in my situation, I'm willing to take that risk because I'm already 70% in. So that is the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.